BizGro Partners helps entrepreneurs exit and/or generate personal wealth from their businesses through the consummation of business sale transactions, which simply consists of a business owner selling his or her business for a sum of money or a long-term prearranged buyout. BizGro helps business owners sell their company by buying its client's business or serving as a professional agent, in which BizGro represents an owner or owner's interest during the sale. In the event BizGro serves as a potential principal buyer of a business, BizGro simply interfaces with the business as a target acquisition and works out a deal to acquire the entrepreneur's company at a price that both parties agree to. Typically, BizGro will want the owner to remain as an officer, manager, salesperson, and/or a minority shareholder so that BizGro can carry its growth plans forward. In the event BizGro has no interest in purchasing a company, or in the event both BizGro and a company cannot work out a deal, it is possible that BizGro can represent a company for sale as a professional agent hired to procure the best deal in the existing marketplace. We have a specific process that assures the clients we represent their desired results. Our service process includes: number 1, valuing the business. Number 2, identifying capital sources to finance the sale so that our client receives a lot of cash up front. Number 3, developing a professional selling prospectus to attract potential suitors and capital. Number 4, identifying potential acquirers. Number 5, conducting a professional selling and negotiating process that will result in our clients receiving the best deal possible. Number 6, assisting in the due diligence process and keeping in touch with buyer, seller, attorneys, and accountants. Number 7, bringing the deal to the closing table. A typical business that BizGro will represent in a business sale has the following characteristics. Number 1, is a B2B company that functions in the manufacturing, wholesale distribution, import-export, healthcare, transportation warehousing, or business service space. Number 2, produces $2 million to $50 million in annual revenues. Number 3, produces earnings of over $300,000. Number 4, has enterprise value from $1 million to $25 million. Number 5, has 10 to 100 employees. Number 6, features an owner or owners that has a genuine interest in either exiting or transitioning from his business. BizGro has 2 major philosophical perspectives in regard to business sale transactions. Number 1, how to determine enterprise value in a privately held company. Number 2, the importance of a proactive approach in selling a company in order to procure the best deal. BizGro breaks the value of a company as having 2 components. Number 1, earnings, which is simply the profit a business makes after paying someone to run the company. Number 2, goodwill transferability, which is the likelihood and risks associated with transferring the income-producing potential of a business to a third party. In short, earnings is how much money a buyer will earn based on the business's performance under the selling owner's management, while goodwill transferability is whether a buyer will retain this estimated earnings potential once the business is no longer under the selling owner's control. From our vantage point, earnings determines the price of a business because a typical business will trade for a multiple of earnings. The multiple an owner receives will depend on the size of the earnings, the business's industry, and the health of the business. As a general rule, if a business's sales and profitability trends are strong, a business will most likely receive a higher multiple of earnings that will lead to a more substantial price. Further, the higher the earnings, typically the higher multiple of earnings a business will receive because of the capital-raising flexibility a higher-earning business creates. Conversely, goodwill transferability determines the terms a business owner receives in a deal. This component determines how much money an owner receives up front at closing versus how much of the purchase price is to be received over time or conditioned on future performance. Some examples of goodwill transferability risks. Number 1, customer concentration. 1 customer that makes up more than 20% of sales or 2 customers making up more than 35% of sales. Number 2, product concentration. Having 1 product make up the majority of sales. Number 3, salesperson concentration, having 1 salesperson that manages the majority of the business. Number 4, supplier concentration, having most of your sales being a result of a relationship with 1 supplier. Number 5, decline in sales, profitability, and/or cash flow. Number 6, declining industry. Number 7, Poor aging report. Late paying customers. Number 8. New competition that has affected sales dramatically. Number 9. New government regulations. Number 10. Relationships that are strictly tied into the current owner or owners. The second key philosophical perspective that influences BizGrow's process is the belief in the importance of proactively seeking out buyers when a business owner wants to sell. BizGrow believes in the practice of tapping into the total universe of buyers when selling a business. This total universe consists of buyers in our clients' industries, strategic buyers who are looking for a complementary fit, financial buyers who want to invest in a business for a return on investment (ROI), and individual entrepreneurial buyers who are looking to work in a business and make a living. At BizGrow, we believe by tapping into the total universe of buyers, our selling client will open up more options, receive multiple offers, and be in a position to drive the price of the business upward. Without multiple options, we believe a business seller will not have the leverage he or she needs to procure the best deal possible. A typical sell-side representation engagement includes the following. Number 1, a 1-year exclusive agreement that is renewable. Number 2, $5,000 for a business valuation and selling prospectus. Number 3, success fee of 10% of the sales price due at closing.